So this is the trade I took on Nasdaq today. What I marked is the London lows here, because this is 430. So I marked these lows here as London lows. I think I've labeled them here. These were the London lows. I waited for the London lows to be swept into a 15-minute fair value gap here. If you can, let me show you the fair value gap on 15-minute. Let me remove this. So this is the 15-minute fair value gap. There was a 1 hour order block below it, but I did not expect price to drop all the way to there. So when London lows were swept into the 15-minute fair value gap, I waited for this. This was the first presented fair value gap after 9:30, the one ICT talks about. So I waited for the market to close just above the fair value gap, and I used the next candle to take the trade, and then I marked these highs above here that are just above the 30 minutes breaker block. I don't know if I had the charts are here. Let me check. So this is the trade, the way I took it. At 9:30, manipulated taking London sell side. Entry based on first fair value gap as inversion, anticipating sweep of London highs just above the 30 minutes breaker. There's a reason why the London highs are up here. Let me show you. The London highs are actually somewhere up here from midnight, but there's a reason why I took these highs here. And the reason is I am anticipating, if you look at daily time frame, let me show you. Let me hide this. Previous day high was taken. So I was anticipating a previous day low sweep. But then for me to anticipate that, I wanted this market to close, the candles to start closing below this 4-hour fair value gap here. This is the 4-hour fair value gap. This one here. So that is why I targeted the nearest liquidity. I'm not having high expectations of price coming up here. So you also have to know which liquidity you are targeting. In my case, the nearest liquidity was this one here, that is just above the 30 minutes breaker. This is the 30 minutes breaker block. How we quantify a high probability breaker? These are the last two down close candle before price came up and swept all these highs here, all these highs. So these are the last down close. So it's the order block. These are the order block that drove price up to sweep all this liquidity on the left. Now, an order block becomes a breaker when the market sweeps, violates the order block aggressively into the opposite side. Now, these two down close candles, I consider them as breaker. When 9:30 was starting, market was somewhere around here. And I anticipate a retrace into the breaker if I am to sell up to the previous day low. The previous day low is this candle here. This is yesterday's low here. So I anticipated a retracement into the breaker, and so I looked for the liquidity that is within the breaker or just outside the breaker, and I was expecting the candles to come and sweep the liquidity, but then close inside the breaker. So if I'm going to sell this market up to the previous day low, I'll wait for the market to come again below the breaker, and that is when now I'll drop to. I'm looking at this from 30 minutes or 1 hour or 4 hours or whichever time frame on higher time frame. But then for me to frame an entry, I'll have to drop on lower time frame, for example 1 minute, and then I will look for such a setup, or the setup that I use, the one for breaker, like last up close candle, liquidity sweep of the London, close above here, retracement touching the breaker, because I would have used this candle here as my order block that pushed price to sweep these lows into a 15-minute fair value gap. And then I will wait for price to close above this order block. A failed order block is a breaker. And then this retracement candle here, this is an entry for breaker. So if this market starts closing below this breaker here, the 30 minutes breaker, I will look for such a setup again. I'll wait for a small liquidity sweep inside here. Maybe something like this might happen. The market might consolidate here, then come and sweep those highs. So this will be my breaker here. This candle, the last down close candle here, will be my breaker, the one that I'll be anticipating to frame the shorts from. So when this market does something like this and closes below this, the last order block that will be here, so I will anticipate for a reversal like that, and then selling all the way to previous day low on lower time frame. All my entries are usually based on between 1 to 5 minutes time frame. So it is the same thing I have done here. Even though I did not use the breaker, I made an early entry here using this inversion fair value gap that has there's a small volume imbalance here. This one. If you look at my entry, that is what it is based on. This is my entry in the volume imbalance here, and then taking these highs here. So that is the trade that I took today. So unless you guys have a question. So, Macolin, if these guys don't have a question, I think I'll stop presenting and then you can take over the stream. So, this was today's trade. This is the trade that I took today. Unfortunately, I'm not coming back to it. I'm not good at dealing with BS, and I'm not coming back to. I value my peace of mind more than anything. So I think that is all for from me today. Yesterday I also
listening. The guys can ask the questions right now.
Yeah, if they are listening, maybe they can ask the questions. Westy, you're saying I should open X for only one day. There's a guy called Kerosi on X. He has all my charts, the one that I posted. Maybe you can talk to him and as idea nazo. There's someone saying you only trade after 9:30 open. Mostly, yes. I only trade mostly after 9:30 open, but there are times I take trades before 9:30. I don't know if I'll check that from my journal. Let me see. There are trades that I usually take before 9:30. I don't know if I'll find them. This is yesterday's PM session trade. So it should be. This is. Let me see. This is yesterday. I want to show you a trade that I took before 9:30. So there's someone telling me to touch on I can see some of those charts. There's someone telling me to touch on dealing range. So so about dealing range, let us use, for example, 5 minutes before for example, if you look at, let me cut this price to somewhere around there. So if you look at this chart, this is the liquidity up here that I would have targeted on this market. This one, this is the liquidity. So if you look at from high to where the market when this is the 1 hour order block from yesterday, and it's already 10. 10 is already here, and you are expecting the market to retrace for you to buy up here. So what I would normally do, first of all, you have to understand that personally I trade breakers only. For example, in this case, this would be, let me first exit this. This would be my last down close candle before the liquidity sweep of all these lows on the left, including these ones, into the 1 hour breaker on a higher time frame. So if in your dealing range, when you take your fib and you place your dealing range, your highest probability breaker has to form below 50%. If your breaker forms up here, that trade is not high probability. If your breaker forms below 50% of your dealing range, let's say the dealing range is where your target is to where your market hit a higher time frame PDRA, where you expect it to start turning. So if I have my fib like this and I can see my breaker is below the 50% mark, I am expecting price to at least retrace down to below 50% in order for me to enter this buy market here. So this is how you use the dealing range. If you're buying from here, you look at where are you now, which is the lowest point. The market dropped from here, which is here, for you to want to go back up there. And all your entry method, there are people who use 2022 model, which is liquidity sweep, market structure shift, fair value gap. All those setups should form below 50% of your dealing range. If your liquidity sweep is after 50%, let's say, for example, someone will take this high and then wait for a liquidity sweep, that is a low probability setup. And in most cases, this market is going to take you out. And you also find that your stop losses are too wide because your setup for buy on lower time frame has not formed below 50% of your dealing range. So for me, if the breaker forms here, so this is now, I will wait for something like this. Let me play this market. I'll wait for a retracement, maybe into this one. You see that? So I will take my entry from somewhere here, and my stop loss is below or in the mean threshold of this order block, and then I'll wait for the market to play to my take profit. So this is how you frame using your setups using the dealing range. And as you can see, the market 288.9, this is 288.4. So your liquidity has already been taken here. So that is how you deal with your dealing range. And then my RR is determined by where is my liquidity. In fact, my RR doesn't matter. What matters is I've built a model that that helps me take my trades from if I am buying from the most discount side. For example, in this market, I'm sure I took a trade from somewhere down here. Let us explore this area and see what happens. So if you look at, this is 1 minute. If you look at this trade, the market, this is the last down close candle now on 1 minute. This one, this is the last down close candle before sweeping of these lows on the left into the 1 hour. This is 1 hour order block, this shaded area. So if I am targeting London highs, these are London highs. These are London. Let us assume we are targeting these highs. If I place my fib from here to here, you can see where my breaker is. My order block, which has not yet turned breaker, it's on below 50%. So if it's always below 50%, you will always get an RR of 0.5. This is 1, 2, 3. It's that simple. Your dealing range will always give you an RR of 1:3 if your entry model forms below 50%. If it doesn't form below 50%, that is a low probability trade. And I've taken trade like this that breakers have formed above, and then I get wrecked because, first of all, if your breaker is here, your RR is small, maybe 1:2. If you look at your stop loss can be here and your take profit is here, so your RR is 1:1. You see, but if I take this trade from somewhere around here, my RR is 1:2, somewhere 3, or even if I have a higher target like this one, my RR is 1:4 and above. So in this trade, I would buy somewhere here, and then my stop loss can be mean threshold of this order block, considering this is a market structure shift, fair value gap. So if and then my take profit is somewhere there. So you can see this is a very good RR. This is 1:3 risk to reward ratio. So that is how you are if you know how to frame your dealing range, they will help you to have a higher RR. For the person who is asking how you determine the RR, and this is a trade I took. I don't know which day is this. This is yesterday. So if I look at my history here from yesterday on my chart journals, yesterday was on Thursday. This is yesterday was 24th. You can see the trade. Even my entry is just here, and this is, and then you can see my stop loss placement is here. So this is how I took the trade. And when you're buying, every bearish PDRS should be used to support your price to go higher. So this was the same trade that I took, the one that I've demonstrated. So that is how you frame your RR while you're in the market. You just have to know where is your dealing range, where is your liquidity. Now, from your liquidity, where do you want to buy from? If you want to buy from the market is turning and your liquidity is here, your liquidity is up here. Even if you look at this one, the one for today, my liquidity is up there, and then sorry, let me place it correctly. My liquidity is up there. You can see my entry is always below 50%. My entry is here, and that is why I have a tight stop loss and a very good RR. So that is how you frame using the RR. I don't know if you have, there's a lot of questions. There's a post you shared using fib levels. I've already done that. When you take trades on PM session, what do you really look for before taking a trade? Now, Wayne, let me answer your question. I'll use the PM session trade I took yesterday. Let us go to, this is I took yesterday. Let me cut. I think having issues with my, this is Thursday. So this is the PM session. So when you're taking trade, I don't know why it's taking time to load. So when you're taking trades, if you look at this trade that I took yesterday during PM session, now I took my entry here, right? And then this was my first take profit, this liquidity. This is the trade that I've just demonstrated. But then I had another liquidity. I don't know why I had other liquidity here. So when price reached this high, taking my first take profit here, but did not sweep this liquidity here, in my mind, I am knowing that this retracement, price has engineered more liquidity here for buy side during PM session. So I will wait for lunch hour to play out, like this one here. And then during PM, after 2 PM, I'll look for a PDRA that price can retrace to. For example, in this case, like this inversion fair value gap here. And when price does this, this is a liquidity sweep. So let me show you. During PM session has started here. This is 2, this one here. But then this liquidity sweep, because the lunch hour runs from noon to 1:30. So after 1:30, I'm starting to frame my setups. So for me, this is a liquidity sweep here. This is the last up close candle before market came back and swept this. But note, it did not sweep during PM session. PM session had not started. So I don't have too much expectations with this price run. And the reason is this. The market closed above my breaker, but then there is no retracement. So I am comfortable with this trade, taking my TP and leaving me, as long as it has not given me what I want. And what I would want is price to retrace into this fair value gap above my breaker or deeper into the breaker before I take a buy. So I'm very comfortable with this price going up and taking my my liquidity here if it does not give me a retracement. So what is the market telling me? The moment it doesn't take this previous high and the high that I'm anticipating, I'm knowing that there is more liquidity being engineered here. And when something like this happens, a drop like this again, now this is an inversion fair value gap. So this is a turtle soup inside an inversion fair value gap. So I will take this trade without hesitating from here and targeting these new highs that have been created here. And if I show you, I took the same trade, I think yesterday during PM session. I'm not sure if, let me see. I took the trade yesterday. Yesterday is 24th. During PM session, let me see. Yes, you can see when price dropped down here, I used this inversion fair value gap to enter the trade up here. I knew price is going to buy, so I took even before the inversion. The ideal entry would have been wait for price to close above this retracement, enter here, and then go return here, enter more longs, and then this is how you frame that trade. So during the PM session, you look at, did price achieve the AM session's goal for example, where your liquidity is. So those are the things that you look for. If price did what you wanted during the AM session before you frame your PM session sell. So you can, trade. So you can see I bought the same market. So that is what you look for if when you're framing a trade during that time. So that is how you frame the PM session trade. So RR buy side or kuna engineered buy side. How are you navigating all time frames? You have to know how to navigate in different time frames. Sometimes I even use 15 seconds time frame sometimes. So for this price action, I would anticipate a run into this breaker, this one, if price is to go up. But for me, I'm looking for sales to previous day low. How do you determine where you take partial NB, especially kama kuna multiple swing points before you full TP level? Yes, man, Samusa, I'm using 1 minute. I trade on 1 minute time frame, and my liquidity mostly is based on 15-minute time frame. But I only trade the direction of the 4-hour candle. Like I have to know where the 4-hour candle is moving in order for me to trade. And if the 4-hour candle aligns with the daily bias, those are some of the best trades that I can take. Or if the 4-hour candle is supposed to retrace maybe into a PDRA, like a fair value gap or an order block, that is your 4-hour candle that starts at 10 should mostly align with your higher time frame or daily bias. Those are some of the trades that run the best. And now if you look at this one, you can see the 4-hour candle is consolidating. So I'm sure people are getting chopped in this price action trying to trade the 4-hour. In such a scenario like this one, I would usually sit and watch until after lunch hour. That is when I'll start now trading or framing another trade. How do you determine where you take partial? For example, in this market, if I wanted to take partials, this one, I would have taken partials so I have the RR. You have your RR here, which is my entry was here. So I have 1 RR, 2 and 3. So my first take profit would be on this swing high here. If you're using dealing range, your first take profit should be here, and then you let the other run. If your RR is 1:3, but then sometimes I get even 1:10 RR, so I'll take multiple partial. But every time there is a swing high and a PDRA below it that has been violated, let's assume you are buying from somewhere na uko chini kabisa, and this is an inversion fair value gap, and this is a high. Once the market violates this inversion fair value gap and then trades above this high, it is safe to take your partial here and even trail your stop loss. How do ICT? Do you use ICT macros? Yes, I use my ICT macro. I use them a lot, especially on a PM session. Akona soft voice, lol. Do you use NDOG and NWOG? Yes, but not on Fridays. I don't expect to be using NDOGs and NWOGs on Fridays, because on Friday is usually TGIF, and TGIF, the market is usually supposed to retrace at least some percentage of it's the power of 3. For example, the market opens on Monday. Sorry, let me draw somewhere else. So the market opens on Monday. Let's say you are buying, so you and then manipulates down, goes up, and then on Friday, if the market is here, like the way it's almost there today, you expect some form of retracement before market closes usiku, or whichever time, New York time. So this retracement of the weekly candle called TGIF, the 30, at least 30% of the weekly candle range retracement, that is what you expect. So if this is the weekly candle, that means the NWOG and NWOG formed somewhere here. You don't expect the weekly candle to drop all the way to NWOG on Friday. So I would mostly expect to have only a minor retracement of the market back into the range. How do you use how to determine the daily bias? This is how you determine the daily bias, or more so, this is how I determine the daily bias. And for me, it's easy because I don't trade during London session. So I'll come back to the charts at around 8:30 and look at what has the market been doing. So if you look at, for example, this is a daily fair value gap here, which was filled on Tuesday. So if the daily fair value gap, if the market filled daily fair value gap here and closed outside that daily fair value gap, for sure, I know that the next day, this market is going to buy. Let me remove these drawings. If the market retraced into the daily fair value gap on Tuesday and then closed above it, I know for sure the next day the market is going to buy. So what will I do? I'll be expecting a measure of retracement into this week, this daily week, before I frame my buy on Wednesday. That is because this was on Tuesday. And as you can see, this is on Tuesday, and then the whole of this is on Wednesday. And this was a very good market maker buy model. I actually traded these London session highs drop into, there was a breaker here, and then I bought all the way to sweeping of these highs and beyond. This target was achieved on Wednesday, this one, this target here. So you frame your daily bias based on what happened the previous day and which PDRAs are there. For example, I knew this was a buy automatically. The only time I will get some, like for example, this all-time highs has been taken. So I also expect some measure of retracement. So I'll be looking for PDRAs on 4 hour instead of the daily. If the daily is not clear, you can see here, now you don't know what the market will do next, or if it will open here and then buy, continue buying, or retrace into this order block and then continue buying. So what you do is you look for PDRAs on the 4 hour, for example, inversions like this one, or fair value gaps that are like these ones that are supposed to support price the way price is doing now. See, so that is how you frame your higher time frame bias or daily bias. And if you trade during New York session only, it's easier for you to know what the market is doing, because by the time you're coming to the market at 10 or at 9, already 2 or I don't know if it's 3 candles of 4 hours have already played out, so you can easily frame your bias. How to determine, are you trading on Atumia? I use New York time. You can see here, New York time is here. Kindly touch on how you identify valid liquidity sweep. So most liquidity sweeps, there are different categories of liquidity sweep. For example, there are session liquidities. If you look at my trade today, what did I target? Let me show you. I targeted these highs inside a fair value gap, which are also London session liquidity highs, which had not been taken during New York. So the first liquidity is session liquidities, these ones. For example, price swept London lows. These are all liquidities in London lows, these ones. And then went and swept what? These liquidity sweeps inside what? This fair value gap here. So that is one type of liquidity sweep. The other type of liquidity sweeps are equal lows or equal highs that have formed inside a PDRA. For example, this is a whole fair value gap. This one. This is a whole fair value gap. And they have created some equal highs inside here, and you expect some measure of retracement into a fair value gap before continuing to sell. So this is also a valid liquidity sweep. And also you can see that there are London session liquidity that are inside a higher time frame PDRA. So this is a very, very high probability liquidity sweep. And then the other category we have is higher time frame liquidity sweep. For example, if you look at this market here, this is liquidity sweep, external liquidity sweep, this one. These are equal highs, this one, they are classified as equal highs. The market dropped all the way to and swept this maybe into a PDRA somewhere here, this one, this order block here. And because it's a market maker by model, at this point, the market is somewhere here. So we don't have all these price actions. So these are external liquidities that the market was targeting. So this is another category of liquidity sweep. We have internal and external liquidity sweep. So there are session liquidity and then internal range and external range. Session liquidities are also internal range liquidity because they fall within. If we are going to all-time highs which is, I don't know if it is this one. I think this is all-time highs, if I'm not wrong. If we are going to all-time highs, this one, this is all-time highs, but I have already traded internal range liquidity here. So this is external range liquidity, these ones here. And then the other category of liquidity is order block liquidity. There are liquidities that lie inside high probability order blocks. For example, and that is what I trade. Now, these are liquidity sweeps, these ones here. So my last up close candle before the sweep, this is the order block here. Before this sweep, all this liquidity here, this one, those are order block liquidities, but they are usually very complex, because this liquidity sweep has to be, the lows are swept in this case into a higher time frame PDRA, and in this case my higher time frame PDRA, you look at the recent higher time frame PDRA was this 15-minute fair value gap here. So this liquidity have been swept into these lows here have been swept into a 15-minute order block, and then we start buying. There are also liquidities that form inside volume imbalances, inside NWOGs, NDOGs. For those people who know NWOGs and NDOGs, sometimes the market, I don't know if we have an NWOG for this week, sometimes the market opens up. This is Wednesday. And then within the NWOG, there is consolidation, and then market breaks away and leaves that consolidation inside the NWOG, and then it will go back for that kind of liquidity. Where is Monday? I'm looking for Monday. So Friday. There was no NWOG this week. I can't see any. So, but there are liquidities that form inside volume imbalances like NWOG and NDOG. But for me, how I trade is mostly I look for equal highs and lows on 15-minute time frame, because I am trading using 1-minute time frame. So for me, liquidity like this one for London or this one's for London is high probability, because they are session liquidities, and that is what I mostly trade. So I think I've exhausted the questions, if I'm not wrong. I don't know, but I will now hand over back to the owner of the stream. I think as Kenyan you should use. No, you use Anthony Mbugwa. You use the time you feel like. For me, I learned through ICT, and ICT uses New York time. So I'm comfortable with setting my laptop on New York time, and the market runs on New York time. So that is what I am comfortable, and it's easier for me to use that time rather than Kenyan time. The last time I tried using Kenyan time, mimi najuanga tu 4:30 ya Kenya nafaa kwa nimekaa kwa trading station yangu nikiangalia laptop. That is all I know. How do you determine a high probability order block? Now, that is a very, very, very interesting topic, which I was actually going through the other day. High probability order block. For example, let us look at one example here. A high probability order block has some few characteristics, and characteristic number one is, for high probability order block, is it must lead to liquidity sweep into a higher time frame PDRA. For example, I don't know what I'll use. Let me look for a perfect example. This one. Let me use this one. This here. This is the last up close candle before price swept all these lows into, I don't know what is this, unless I go on a higher time frame. Let us see what this is. No, I think I marked a fair value gap here. 4 hours. Let me go back. Nimepotea, guys. So the first characteristics of a high probability order block is it must lead to a liquidity sweep. That is one thing. So if you look at this candle, the market was trending here. So this was the last up close candle before market dropped aggressively, sweeping all these lows into this higher time frame PDRA. This can be another order block. If you're on 15-minute, this can be order block, 30 minutes order block, 1 hour, 4 hour or weekly. So that is one characteristic. If your order block does not sweep liquidity into a higher time frame PDRA, it is not a high probability order block. That is one characteristic. Another characteristic of a high probability order block is it should form at specific time. For example, I cannot use an order block that formed during Asian session to form my trade in London or New York. So my order block has to form within the session which I am trading. If you look at, let's drop to lower time frame because they are the ones that I use. If you look at my trade from yesterday, this one, you can see here, this order block here, this one, formed during 950 macro, this one. This order block formed during 950 macro, and it is the one that led to sweeping of this liquidity into a one. There should be a 1 hour order block, a bigger order block here. So this is a candle that led to sweeping of all these lows into 1 hour order block. So it formed during 950 macro. I could not have used this one. This formed during 825. I could not have used maybe this one. You can see this one formed at 2 because it's the last up close candle before liquidity, these lows here, because this order block formed at a specific time, which is high probability time during sessions. So it must also form at specific time. It should be time-based confluence order block. The other characteristics is it should lead to a displacement on the opposite side, leaving a fair value gap. And the displacement should be strong, for example, and also a market structure shift. If you look at this imepotea, what time frame are we in? Where is it? I'm lost. If you look at this, you can see the displacement away from it is very strong, leaving some few imbalances here. If you come to 15 minutes, you'll find this is a whole fair value gap. And then retracement, and the candles are closing inside the breaker, and the market moves away. You can see that. So there must be a displacement on the opposite side, leading to market structure shift. So those are the most high probability conditions for an order block, for you to know that this order block is going to hold water according to how you want to play. I'll show you some of my journals. Let me show you some of my journals. You'll see the order blocks that I use. They all have that characteristics. Let us look at this one. I'm just looking at random charts so you guys can see I do the same thing over and over again. This displacement, where is it? This displacement above this high here is a market structure shift. So this order block here qualifies with all the conditions that I'm expecting it to do. Has led to liquidity sweep into a higher time frame, PDRA. Look at the time it is forming, between 10 to 11 silver bullet. So it is within the New York session. And then it has led to displacement above, and then there is what? A fair value gap, return into fair value gap. And this trade played out very well. I don't know if it is the same. I'm not sure if it's the same. So it is the same thing. If you look at most of my charts, it's the same. There is the trade actually. So your order block has to be high probability. Another example is this one. This is the last up close candle here. This the market later end bought. So I'm still there, or I'm talking to myself. I'm not sure. Are you guys there? Before you go, I usually place limit order when entering the market, but it usually rejects 50% of the time. It's forcing me back to MT5, but you can use instant execution. For me, I wait to enter the market manually. I execute manually. It is easier that way. Ongelea CISD, that is Mr. White's stuff, but CISD is basically market closing above your order block to create a breaker. Your network is faulty. Yes, sir. Your Wi-Fi is bad. Sauti inapotea. Oh, so guys, that is all for today. I will hand over the stream back to Marcolin, and I'll be showing up from time to time. I told him we can do some live trades on Tuesdays and Thursdays together. I'll be appearing on his channel to do, we can trade NASDAQ together, doing live trades, executions, and everything, so that you guys can learn how to navigate the market. Robbie Morara, yes, I use SMT a lot between, I use SMT between, I don't know if there was, let us check if there was SMT today. Between NASDAQ and yes, there was SMT today, as you can see here. So NASDAQ swept 930 candle. Where is it? What candle is this? 935. 935. You can see the candle for NASDAQ swept these lows on the left, and then the one for ES failed. So this is a kind of SMT. This is a sign that the market wants to reverse. And I would have usually traded this one, but I am used to NASDAQ a lot. So I think I use SMT also a lot, and it's a good indicator that the market is reversing. So guys, that is all for today.